All right, team. Here's your recap for um, yesterday, or the second half of yesterday, and also leading into today. So I'll start with uh, pound USD, right? And I want you to pay attention to how, as usual, everything is always um, the same in terms of what we're looking for, right? Uh, so for starters, on pound USD, right? Okay. So yesterday we had cable push into this fair value gap, right? And this is sort of the same scenario that we had um, on oil, if you can remember, right? Price we're in a downtrend market, and price pushes into it retraces into a fair value gap. Now, I can't stress enough that if you want a system that is somewhat bulletproof, right? Which there is no system that is bulletproof. But if you want something that will aid in providing you with high probability scenarios or narratives, right? And I'm very big on, the narrative is first. Then I would say focus on, right, trending markets and allow your points of interest to be the higher time frame fair value gap that price retraces into, right? Because that fair value gap is what price is going to prioritize, and then we'll see price deliver away from that fair value gap, and in this case, it'll seek more discounted prices, right? Now, something I want to point out on the pound USD, right? Because this is going to come up in a second when I explain my buys here. Right, this is that yearly low that we've been talking about for a long time, right? We probably sits way up here somewhere. Okay, we finally met that target, right? So imagine the amount of liquidity, right, left under here, right? That price has now been matched with. Okay, I'm not saying that we're due for immediate reversals. One thing I will point out is that we're in that that final third of the year, right? If you break the year down into fours, so we're just getting into September, right? September, October, November, December, right? The last 4 months of the year. So we could see that quarterly shift, okay? Now, going back here, right? Pound USD pushes into this. It retraces to this daily fair value gap, okay? And all of this happens. We see it Tuesday. Tuesday. Monday was more bank holiday. And then we take out Monday's high, right? So we're inside of that daily fair value gap. And this is what price is delivering to us, okay? This is very easy and simple, because as soon as we see this series of candles here, right, as soon as we see it sweep previous day's high, okay, and provide us with a market structural shift, which is here, right, that should confirm for us that order flow is now bearish, right? Short-term high, intermediate-term high, right? We have displacement, okay? And so we be trading inside of this fair value gap. Now price does push above because they take out, this some more fractal short-term high here, right? But nonetheless, you'd be trading in anywhere inside of this range here, right? And stops should go over the intermediate term high. Okay, so you shouldn't even be concerned about this here. Okay. And then as price begins to deliver lower, right, order flow establishes itself, right? Here's a propulsion block. Boom, this order block trades into this order block. And then here, right, here's another market structural shift. Here's another market structural shift, right? And then price trades into this fair value gap also, right? Here's a series of up close candles. These candles sweep this high and that high, right? Can possibly be seen better on the lower time frame. So here's the series of up close candles, and then we'll just go to 4 minute. I'm sorry. Okay, so this high here is swept. So here's another short term intermediate, right? Look at what this high is doing. It's rebalancing this small fair value gap right in here. Okay, so whenever fair value gap is balanced completely, right, we deem this as our intermediate term high, and from that we anticipate a failure swing. Okay, so we be trading the 50% mark of this fair value gap here. This entry comes at this is in that 8:30 window, so this is perfect. All right, so 8:30 opening price is here. Okay, 8:30 opening price is right along this black line. Price pushes above the 8:30 open, and then we push lower. Okay, and it's also above true day open. Same scenario up here. Once we take out this short-term high, and then we kind of create another fractal with another short-term high, intermediate, and of course these equal highs. This high was left here as layered liquidity because of course it seems that as though price is going to return back to this area. We could see it return to this area tomorrow, but I'll get into that in a second. But same idea, we sweep these highs, right, and then look what happens. And when you're trading this, you should keep in mind that this is my intermediate term high. Okay, I've gotten a market structural shift. Price is just pushing to the very extreme, right? It has to run very, very, very far, all the way down to this yearly low. So it's just pricing in more and more liquidity, rather. But anyways, you should see this series of up close candles here. And then if the fair, get displacement, market structural shift, price trades to this fair value gap, and then it drops lower, right? Same idea here. We sweep this high as we fulfill this fair value gap, and then we trade lower. Market structural shift is here, and then you'd be trading this FVG right here. So it's that, and then here right at 50%. Okay. So you see the bodies never go above 50%, so that's pretty algorithmic, right? And then targets, you'd be targeting this long-term objective, and of course there's tons of equal lows here, and then those equal lows here, that low and that low, and then price pushes even lower to the yearly low. All right, so that was that. And then you can see you even get a retrace here. So if we were to look at an OTE trade, because remember this high actually took liquidity, we can move from that to that. So we are in we push to premium sides of this current range. Okay, and then what we're doing is we're tapping into this fair value gap here. We sweep the high of that candle. All right, let's see if we can find possible entries. So I really haven't studied this particular area yet. All right, and then right away we see, right, okay, here's a short-term high that's built, right? Obviously this is engineered liquidity. Okay, we sweep. Has to be a low hold here. Okay, cool. Yeah, we sweep sell side, right? Remember sell side. Once you have a sell side sweep, that will then reprice to buy side, right? So we reprice here to this buy side liquidity pool. Here's where the fair value gap is. Once we engage with the fair value gap, look what we get. Same shit over and over. Series of up close candles. Once price trades through that series of up close candles, okay, you'd be trading this fair value gap right here. Okay, unless you, and what you can do is you can go, you can walk the time frame and see if you see something else, which we have this one here, which this is exactly what price trades into. Okay, and it's clearing more liquidity above these highs. But for me, once I see Once I get the still image right with the series of candles in a down move, I'm no longer concerned about getting the very pip entry, right? As I'm well beyond that, right? That's beyond the scope of my trading at this point. I just want to get filled, and I want to take high probability trades, and I want to make money rather it's a 1-to-1, 1-to-2, 1-to-3. I'm not concerned because this stuff prints every single day, right? So we don't have to catch 1-to-10s because how many times does this print? I mean, even if you don't catch the initial move, it's gonna print again, right? At some part of the day, it's gonna happen, right? Here's that London time window, right? 11 a.m. Okay, London close, right? It's optimal timing for us. And then the mitigation happens, right at noon, right? And then you see price go lower. Okay. Right, and let's go to a 1 hour time frame. So we get here and we sweep that buy side liquidity pool. And let's see what we got. Alright, so as soon as this is clear here, you should be able to take shorts. So price should not run back above that area. We just swept liquidity above this high. So I'd expect us to reprice, lower at this point. Where are we? Okay, cool. Let's look at it 1 minute. All right, 1 minute has already given us what we want. So we sweep here. All right, we sweep here. The only thing I don't see within this is fair value gap, maybe on the 30-second. I don't go to the 30-second often. All right, so it is here. You do get it right here. This would be the fair value gap. You could trade that as it's rule based, but I'm not encouraging 30-second time. But what price does do is it trades this into this fair value gap, and it does mitigate this order block. But I would like to see, well, I can't even say that because we do have a fair value gap inside of the range, right? There it is. Okay, so let's not even go any further on that. All right, so you take entries there, and then we see price repricing lower. So this honestly would have probably been the very tight stop loss. If you trade it here, you'd be targeting all of this liquidity down here. It's 1 to 5, and then if you came all the way to the low, it should be probably a 1 to 10 to some degree. Yeah, 1 to 10. All right, so here's your 1 to 10 trade, right? It's gonna happen every now and then. So allow those 1 to 3s, 1 to 2s, 1 to 4s to build up, because what you're doing here is very highly probable. So yeah, just a piece of advice for you all. All right, here's another fair value gap. Right, once this low is cleared, and this is the actual 2 minute range of series of candles. Right, here's the fair value gap inside. Everything above is balanced, so we don't, price doesn't necessarily need to trade back above here. All right, and we see it trading to this 50% of this fair value gap here, and then it begins to reprice lower. Okay, and we see it's very intentional about getting down to that low. There we go. Boom. Okay, now let's look at an hourly chart. Okay, so now we tap into this 1 hour fair value gap. And we sweep this high. Okay. All right. So we've tapped into the 1 hour fair value gap, which is, right at this high. We sweep that high, which is buy side liquidity. Okay, we're in a downtrending market, and then here is your series of up close candles, your order block, the true order block, right? And then price literally comes to the bottom portion of the order block, right inside the fair value gap. Sorry, my allergies are kicking my ass. Okay. Um, all right. So let me go back here. All right. So now here's the point. Here's where we're going into London close, and I just stated this in the group the other day. When price has been trending right for most of the day in one direction, and um, we're nearing London close, and price meets a counterparty liquidity pool. What I mean by counterparty is we're in a bearish market and we've just met a higher time frame sell side liquidity pool, right? Counterparty. Um, these profiles or these scenarios are prone um, to see price trade in the opposite direction, right? So right away we see midnight, and also this is something else to pay attention to. Watch what price does at midnight. At midnight, typically you'll see a displacement in the opposite direction of where price wants to actually go for the bulk of that day, which in this case the cable gave an expansion or displacement up. All right, so here we are. We've swept. We've left these equal lows, right? Which this would have been the narrative for this trading idea here to go short. That move happened, so this is right around the equities open, right in that window. Okay, 9:30 is when we get that extra volatility. All right, we sweep that low, and then I want to see if price wants to run lower, right? If it doesn't, we'll get a failure swing, and then price will clear the high of that failure swing of that, of this little new range here, right? And then what I'm looking at from here is, so here's my series of candles, right? Here's my order block, here to here, right? And now I want any fair value gap inside of here, right? If price ever trades back inside of there, then we would be taking, that trade. And I want to see it's on the, yeah. So here's the fair value gap here, right here, and right here. Okay. Bingo. Right. You see the bodies? They never negate the fair value gap. And then my targets for this particular trade are these equal highs here, I believe. Yeah, wait, 15 minutes up. Well, I've already reached take profit on this, but where are we? There's equal highs. I want to say it's here. Yeah, it's right here because price came up, fell short, and then we went above. All right, so my targets here were these highs here. And so that was your pound USD trade. And then also, look at this. This is something that journalmen begin to study, pay attention to, right? You see this old fair value gap that has been traded through, right? This fair value gap was once very significant in sending price lower to this sell side liquidity pool. By extending this out in time, we see that price literally finds sensitivity. So here's another fair value gap created at this same price level. Okay. Here. Right. So you'll see this happen a lot if you just open your eyes to it. And it's very algorithmic. That's all I can say. I can't say much more about it. So let's go here. So we don't quite get to discount, but of course I believe from this low here, possibly we do. I don't know. I just want to see where the field extensions go to. Okay, cool. Yeah. So when you're in terms of targets, you can see how price gets here to 62, and we have a reaction, and then this full swing measures right with this buy side liquidity pool. I'm sorry, which it will be taken. Right, price is not going to stop there; it's going to take it out. But I'll probably be out 80%. I wouldn't even risk in the end of the day like this, not fulfilling my take profit. Right, it's only a few pips. But anyways, what I'm showing you is this old fair value gap is traded. It price finds sensitivity around it. Right, it trades back down into it. And then here's a market structure shift, and then price is trading back into the fair value gap, and this is at 11 a.m. Entry. And then here's a 5-minute series of candles, right? So now you start to add confluence, right? You can make it all make sense. So if you want to talk about confluence, this is what confluence looks like, right? Trading to the old fair value gap, and you can see how this area, right, the bodies of these candles never negated this area. We trade through it, and then even on this side, once price is pushed, over this line, right, the bodies never negate this fair value gap. Okay, and then we push higher. And I don't know if there's a lower time frame entry here or not. This would be the series of candles. Once that's cleared, I guess this is your fair value gap within the range. So that would make sense. We took out a low here. So here's a series of candles. All right, and by now, as with all of these videos, you honestly, even if you're just starting, you should kind of get the point here. It's not hard. It's not rocket science. It's not magic. It's the same shit every day. Here's a short-term low, intermediate-term low, and then price comes and forms the other short-term low, and it takes out this sell-side liquidity pool here, right? So much for guys that think that this is an order block, right? You have to have a paradigm shift and view the order block as this, right? Now, we want to see price trade into this here, but it doesn't. But what is rule based is that the fair value gap pushes all the way to this range, and then what is inside of the range, a fair value gap. So you could buy from here, but you would buy understanding that your stops need to be here, and you'd be targeting here and then here also. So even if you took that trade, if you said, hey, I'm gonna trade 50% of this, right, which 50% aligns with where this candle ends, which is also confluence. Yes, this is a 25 pip stop, right? But look at where the Fibonacci extension is sending us. Even if you take profit here, that's about 50 pips. Almost a 1 to 2, right? It's highly probable. If you understand price and what price is doing. So that's pound USD, but ultimately, right, it'll get here 1 to 3, right? It'll get here for sure. We just took sell side liquidity, so we should reprice to buy side. All right, so that's pound USD, Euro USD. I honestly haven't even watched Euro USD the past 2 days. I've been trading S&P 500 and NAS 100 and gold and oil, which have been moving fairly nice. So 2-minute time frame, and I'll show you here. Actually, let's just do this. All right, here's a 1 hour fair value gap that we push into. This is on yesterday, actually. So we push into this 1 hour fair value gap. Here we push into the hourly fair value gap, and actually I'll break yesterday down because there was a nice entry on the euro. Okay, so here this would be market structural shift here, and here's a scenario, right? Here's a fair value gap. Here's a sweep of buy side liquidity of a short-term high. We tap into the fair value gap. If price pushes here, I'm pushing the button, right? I'm not worried about if price is gonna come right. I have this signature that I'm looking for. Okay. Now I'm sure in the lower time frame there's something more that's more defined. Maybe. Let's see if we can find it. Okay, so here you go. If you have OCD, then there's always an answer, right? So once we trade through here, I'm not sure how this operation happens, but what I do see is price trade into that fair value gap. Okay, and then you get another one here. Price doesn't trade up to this fair value gap, but it does trade and mitigate the order block. Okay. All right. Here's one. Right. This actually takes out. So remember, this was the higher time frame fair value gap here. Okay. So here's this narrative. Price is pushing into a higher time frame fair value gap. This is no different in the daily. When we're looking at it in the daily time frame, it's the same thing. This is that fair value gap. Price is taking out short-term highs. Right? You have a true OP formed. And then all price is doing is coming and turning back to that true OP. Very simple. Okay, and then here you get a market structural shift, and then price pushes to this fair value gap. So here's another entry, and it's also above true day open. Right, and then price comes down, and we attack previous day's low. Right, because if we look at a daily chart, even though EU is a bit messy, we're attacking previous day's lows, and then here we just push up. And we build this box, which I'm pretty sure price is aiming for this fair value gap. So I think we're gonna get here. Right? I like this fractal that's formed. You see this 3-bar pattern here. Right? We've taken out a short-term low, so maybe we'll pull back, create another short-term low, and then we'll push to this fair value gap. Back to a 15-minute. Let's play it out in time. Oh, and then here we just push into the fair value gap, and then we go lower. All right. Okay, and here's the ticker for today. Basically, here's previous day's low. DXY took out previous day's high. Pound USD took out previous day's low. So right away, that's S&T divergence. Okay, let's look at this on the 4-hour. All right. So price action today, right, actually tapped into this fair value gap, which we have to play it out to see. All right, so we just ran this high, okay? Now we ran that high, but what we did in the midst was create equal highs. Well, we kind of ran this one too, but it's still relatively equal. But anyways, you can see short-term high, intermediate term high, and then we get a short-term high here. All right. And then price delivers lower. Now I don't per se see anything that jumps out. Of course, actually here. So if I would have saw, which I don't think I'm up at this time yet. This is London. But if I'm seeing this fractal form, right, and then we just taking out boss out here, and this fractal is forming, and we have that market structural shift, and then we have another market structural shift, right? Once this candle here closes, then I would for sure be trading this fair value gap right here. So you'd be trading that, and then you'd be targeting these equal lows here. Okay, so those equal lows are met. So there you are. Everything is balanced here, so you could possibly be safe here, but I'm more conservative. But I would target here. It's only 1 to 2, but it's very highly probable 1 to 2 there, and then you also have liquidity here. The price never gets to previous day's low, so I would just target here and be and be fine with it. All right, from there, hang on one second. Okay. All right, so price pushes into this fair value gap. So this is a true OB here. We have equal lows. All right, and we trade through that. You could also see this as relatively equal lows. So here's the daily low, my bad. All right, so once price trades through that, even if you targeted this, I would probably just target here, and then of course the lows here. And I'll wait and see what we get at this candle here, because that's kind of a fractal, right? Short term, intermediate term, short term. So I would look at a lower time frame and see what price does inside of that area, but it just trades right through it. And then honestly, you have a series of closed candles. Order flow is just constantly forming. Right, look at this here, sweeping high, sweeping this high. But while it's doing all this, it's creating a trend line phantom. So we must be aware of that. This is just an optimal trade entry, right? Price is just coming to 62% of this range. So here's a sweep, here's a failure swing, and then price comes to the neckline of that failure swing. You see that? Okay. Same idea, series of up close candles, right? Can you find a fair value gap in the range? Not quite, but you can find one in this range. So you would enter here at the neckline of this, and then this is possibly 50%. Let's see. All right, somewhat, right? All right, and then price trades lower. Right, here's a fair value gap right in here. Series of up close candles, fair value gap. You can take that, and then we see price run the low. Right. Okay, so here's where we prepare ourselves for long entries. Right. So we run that low, and here's us on a 2-minute time frame, and let's just see if we can find reason for entry. Right. So here's the fractal forming: short term, intermediate term, short term. Okay. And here we go. Bingo. Alright, and here's the fair value gap. Look at the bodies of those candles. Alright. 10-minute time frame. And then you can see we trade into this fair value gap here. Boom. Just barely sweep that low. Right here. Okay, see how precise that is. So this here trades into this fair value gap and sweeps that low. Okay. Now in this scenario, down closed candles, right, should be respected. Here's the trend line phantom that I was saying form in the midst of all of that delivery. Okay. So we would be entering here. Stops would go here. Okay, or you can come under here, but I would prefer here. The reason I say you could come right up under here because everything here is balanced. And then you have yourself a 1 to 4, and then if you held even more, but 1 to 4 is fine for a counter trend trade. So that's that. And then if you enter here though, then you want to come under this down close candle, and then maybe you don't have but a 1 to 1 to 2, 1 to 2 here. So that's even, that's still fine. And it's right at 10 a.m. Look at these entries, right at 10 a.m. Okay, these entries come right at 9 a.m. 30 minutes before the equities market opens. Okay. I have not looked at New Zealand as much. But right away I can see this is yellow for some reason. I'm guessing it's probably a fair value gap. Alright, but right, this stuff kind of stands. It just jumps out at me. I don't have to look at the chart that long to see it. Here's a sweep of sell side liquidity. Here's a series of down close candles. Alright, here's that market structural shift, and then here's price trading into the fair value gap. Alright, and then this happens right at 9 a.m. Alright, so we don't have to go into much detail on New Zealand USD. I haven't really watched it as much. Okay. Actually, I'll just go with this last trade. Sometimes this shit gets boring. Alright. So here is oil. What it's done is it's taken out a low to the very far left. Alright, anyways, you get the point. It's taking out sell side liquidity, right? And then that here, and then it's taking out sell side here, and that sell side allowed us to reprice higher. Alright, and then if we come to a lower time frame, one minute. Okay. Alright, what do you think rests above this order block? It's not an order block. It's just a candle. Alright. Boom, sweep. Alright, so I'm seeing a sweep and just kind of seeing how price is delivering. And then we get displacement, and then here's your fair value gap. Okay, here's the order block, here's the fair value gap. Price, you have a Fourier swing up, down, fill, so we sweep liquidity. Remember, the key to the Fourier swings is you want to see a sweep of some type of liquidity pool. We get that sweep, and here's the low, here's the high, so we actually fail, and price doesn't come to the series of the true order block, but what it does do is come to the neckline. I don't think that's 50%, but maybe it's close, right? But anyways, so I'm trading the fair value gap here because I'm understanding that this is a higher time frame FVG. Price is taking out liquidity and it's giving me a Fourier swing, and then I know that there's a low down here that price was targeting. So those are my shorts. That went for I literally just closed out. Okay, so it's what, a 1 to 4. And then earlier today, right? Okay, so we take out previous day's low, right? We're in a very discounted portion of the market. We take out previous day's low. Here's the order block form. Once we take out the lows, here's the equal lows. We take it out and then we displace higher. Okay. Once that is taken out, what time frame is it? Right. Once it's taken out, once the high of this is taken out, then you see price right here trade into the fair value gap. Boom. And then what we do is we push up and we take out this high right here. Okay, so we take out that high and then we also push into this fair value gap. Boom. See that? Alright, and I want to ask you a question. Is this range completely filled? Yes, it is. Is this a short-term high? Yes, it is. this becomes the intermediate turn high. From that, you anticipate a failure swing, which becomes the other short term high, right? We've taken these equal lows right here. I'll make this line a different color. All right. And then now you have your series of candles here. And I'm not sure, let's see. So the entry actually comes right at 8 a.m. here. I'm just looking to see if there was any other way we could have entered. Not quite. But if you look at a 2-minute, you have a fair value gap here. The bodies of this, right? It's just pushing to the bodies of, because this, we would have saw this as a true order block. This is the kind of stuff you have to look at, because this is now the breaker, right? This area here. So let's actually take the bodies. I'm starting to get a little more in tune with the bodies on these breakers. Yeah, as I continue to get more and more precise and refined with price action. But what's key here is, you see here's a series of down close candles, right? And I'm sure there's a fair value gap in there somewhere. But price comes, it actually responds to this, right? But there's not enough fuel behind this, and we trade through it. Okay, so now price is just using this area as resistance in a sense, right? And then it reprices lower. I don't know what the 10-minute time frame gives us. Alright, cool. Yeah. So we reprice lower, and then downturn in market, those up close candles should be respected. Here's the displacement. We clear. We trade beyond this, so at this point it becomes a failure swing. And then you have all types of confluence. You took a high, you took buy side liquidity. You have a failure swing. You tap into the fair value gap. Here's the fair value gap here, right, on this 10-minute time frame. We trade lower. Here's another fair value gap from there, and then we trade all the way down here. And then my shorts come from, I've already explained that. And then yesterday, you had shorts up here, and these were the shorts that I said I missed by a pip. Here's a series of up close candles, and then we missed it by a pip. All right, and then S&P 500. Yeah, all right, S&P 500 from today. Similar scenario. Actually, we'll start with yesterday. Yesterday, just keep in mind that this whole area here is a 1 hour fair value gap. Alright, 1 hour fair value gap, which was here. Boom, right. Short term high, we create another short term high for the sake of time, London high. And then we get another short term high. Here is my series of candles here. Right. And here's the fair value gap inside, right? But we're not trading yet. We trade once. We get this here takes out this short-term high, and then right at the equities market open, right, I'm trading right at the equities market open, right. At this point, I'm pretty sure about price action. We've cleared all of these lows. So as soon as price jumps up here, I just go ahead and enter the trade right at this OB, right? I was pretty sure that we were going to reprice lower to sell side liquidity. Right, so we do that. We also had equal lows below, We had these lows, and then we had relatively equal lows here. I'm sorry, here. Right. So then once we trade through that, we push to today. 1 minute. We push until today, and then we get here's a series of candles. Here is the fair value gap. Okay. Price clears this high, market structure shift, fair value gap. Then we push higher. And if we come to a 1 minute time, 2 minute time frame, you can see the fractal form. Excuse me. Alright, so pay attention to this, the clearance of this candle here. Now, once you get a lot more advanced in price, there are times where you'll know that, okay, this is the overall 15-minute fair value gap. You could possibly take that entry right away. But once you see price deliver in this manner here, right, and then you get this fair value gap right here, okay, because technically this is the start of the 1 minute series of candles and it's not clear, but you're getting this fair value gap. So it trades up, optimal trade entry, and then boom. But if you look on the 5 minute chart, here's that series of candles, and here's the fair value gap. Price trades right inside that fair value gap. Bingo. So this would have been your entry, and then you'd be attacking this buy side liquidity pool here. Okay, that's all I got for price today. I'll explain what happened on gold later. Same scenarios. Just go study it. Hope this video helps. Let me know if anybody needs extra clarity, and we'll keep attacking.